Okay, this is Brian Stoll for Timing Strategies, Wednesday, January 2nd. Yippee yay, let 'em rip. Okay, first day out of the gate. Everybody knows if you're looking what happened. Let's just try to anticipate what's coming next and what we're going to do about it. So as you check out our previous videos and our current positions webpage, you saw that we were short 40% from here. One of the things I did not update was that we did add that position a little higher. The other day we actually went short 50% on this day. I haven't made the updates on the videos because holiday stuff obviously. So we are short as of 50% here, and today we flipped around and we went long. We're looking at the spiders right here, the SPY. I'm looking for a target slightly below this low, and I know this is probably what every other idiot wave, peon, moron, whatever you want to call them, is looking for. But I'm looking for a target just below the low of the 17th or the 18th of December. Wash out those lows like I was talking. Take out those lows somewhere down here and then just start heading back up. Okay, now if that doesn't happen, well, look out below, baby, because there's a lot of room to move. So we are kind of taking a counter trend regression trade, hoping for that type of move and anticipating some of the systems and signals that we got do indicate that, you know, this is a very low risk entry point, so we have to take it. And we're looking for a move back up into that range. Let me give you a little more understanding here of what I'm looking at. Part of my experience in the years of what I'm doing is to see how markets can be as perverse as they can possibly be to shake out people's dollars from their pockets. What I'm looking for, and this is just again pet theory, is a trade below there that we get tomorrow. So we take a trade that takes us down, washes out those lows on the left that we've got over here of the 18th of November or December, and then the market from there heads back up, cut a boom, cut a bing, and in a most perverse fashion, if it happens, and again this is all pet theory, we've got analogs and we've got algorithms and such, but if it does, that means that we are so right on. Takes out the highs of the 26th of December, and at that point, if it takes out those highs right here on the 26th, then it's going to be off to the races, back up into that range at the highs, and at that point, you know, we'll see what happens. We may get short up there. We'll see. It depends on what kind of expansion. Worst case scenario is if we do get a move that continues to go lower here and we don't get the reverse that we're looking for and the market just keeps moving lower and lower and lower, well, we only put 50% in. We put 50% in long today, and again, this is our RIDEX end of day systems. So we are actually not 50%, we're 40% long, excuse me, to be accurate. 40% long using the RIDEX 2 betas, and depending on what happens as we approach this low here on the left of November the 26th, will determine what we do. If we go flat, if we close below this level, again, I'm looking for a wash and then a close back above. But if we don't get that close back above, then what we're going to either do is reverse and go back short again or go flat. We'll keep you posted day by day. Real quick, want to go to the GDX. Everybody loves gold. Everybody loves Raymond. Well, GDX today is probably its most grand day along with the GLD that we've been talking about. Now, I wasn't looking for this kind of move so early. I was, again, if you check us out on our previous videos, I was actually looking for a move back down into that range from back here. We didn't get that. This kind of gives me a little bit of hesitation because this could be a bull trap. And so what we have to watch at this point now is that high back on November the 5th, or excuse me, November the 8th, and see how it acts around that price level. If you look at the XLF, we have a short position on the XLF, not a big one, but we're looking for that trade to take us down a little bit lower, wash out the lows that we've got here on the left side of the 19th, excuse me, yeah, the 26th of November. Wash out those lows by about 1 or 2%. If that happens, obviously that's going to take out the S&P along with it at that same level. But, you know, we got to take what we've got. We can't just, script everything and have it expect to fall in the way our script is read. So the XLF is dragging the market lower. Everything else looks like there is a strong potential for a bounce coming in. And with that in mind, let's take a look. So there's a very strong potential for a bounce coming in, excepting the XLF right here, which it just really wants to drag everything down with it, which to me looks like it's going to make it. I mean, it more than likely will wipe out these lows at least back here from 2005 all the way back. We could take that out. We're already sitting above these lows, or right around this level right here, back and forth. I mean, it's a critical level, so I'm going to kind of just back off from that for the moment. Take a look though at the EEM, and that to me is just saying, brother, if you ain't off the train now, you better jump off now before it goes off the tracks. To me, that just looks like a big setup. And so what I'm saying here does kind of contradict certain things, because if I'm bullish the S&P, how can I be bearish the EEM, the emerging markets, and bearish the financials? The Fed, they involve themselves in the market, and when they want to move the market, they can do it. Period. Done. They move the Dow and they move the S&P. So with that, we got a tug of war here between both of these. I want to spend one last moment on the XLE, which isn't getting a lot of love today, but it didn't get beat bad as much as it could have with the rest of the market. I'm looking for a price tag on that XLE of about $82. At that point, if we get that move up to $82, I'm looking to get short using this symbol, the DUG, or DUG, which is an inverse of that ETF. In the meantime, we have the FXP, and we also have, we're long the FXP, and then we also have the EEV, which we're also long as well. So the first week of January is going to be a real tepid, flippy one. If you want to see what we're looking at and how we're going to manage it, you can go to our website. We've got an article, part of our client newsletter, just the first half of it that we've posted, so you can kind of read there and give us our feedback and comments from that point. Other than that, we'll keep you in touch. This is Brian Stoll for Timing Strategies 2008, and have a great 2008 to all.